Money FM 89.3, the best of the afternoon update. The afternoon update with Lin-Li Fu.
Money FM 89.3. Good afternoon. It's Lin-Li with you, and you're listening to Industry Insight, where we delve into the latest trends, challenges, innovations shaping industries in Singapore and beyond. We've had many industry captains share their insights and analyses coming from sectors such as technology, property, commodities, transportation, and lots more. There is one topic that's quietly revolutionizing the financial industry. Consider this. What if the future of fund investing was real-time, borderless, and as simple as sending a text? Today, we'll be talking about tokenization and how it is transforming asset management, from cutting costs and unlocking liquidity to reshaping how we think about access and transparency. Joining me is a true insider, Justin Christopher, Managing Director for Asia at Calastone, one of the world's largest global funds transaction networks. Justin, welcome to the show.
Good afternoon. Thank you for having me.
Great to have you, and really looking forward to this conversation. Let's start from the top. The term tokenization has been buzzing across conferences, reports, and strategy texts. For our listeners, many of whom are finance-savvy professionals here in Singapore, how would you explain tokenization in the context of asset management?
I mean, at its simplicity, it's just fractionalization. So we're going to take funds that are issued today, and instead of issuing units, we're going to issue tokens. The main difference being that fractionalization is going to make it a lot easier for people to hold higher value assets in smaller fractions.
Okay, so it improves efficiency and transparency as well, I gather.
Oh, absolutely. Certainly when we start looking at fractional ownership, obviously with the smaller portions, it will change, as you said, the liquidity. It's going to introduce secondary market trading, which ultimately, will lower costs. To your earlier point, much better global access. And obviously with the blockchain viewpoints, a lot more transparency in and around ownership.
Okay, Justin, why do you think the timing is right for tokenization to start making waves in the asset management industry, especially here in Asia?
Yeah, look, it's been fair to say we've been talking about it for quite some time now, and Singapore and Asia more broadly has been a great adopter on the global stage, but we're really starting to now see execution over strategy. The last 2 years, a lot of strategic conversations in and around should we do it, how do we do it, proof of concepts, but they've all been really project-based initiatives, whereas this year, and really rolling off the back of November at the last FinTech Festival, a lot more people are now finding business cases and really going forward with what can tokenization do for the market. The first mover that we're seeing right now is collateral. How do we use tokens for collateral to open that liquidity, start to bring down those barriers, but really drive some efficiency back in?
Let's talk a bit more about that. How do you see tokenization democratizing access to traditionally illiquid or high barrier assets like private equity or real estate or infrastructure?
Yeah, look, I mean, that's the golden key. We know that's the utopia where we want to get to. We absolutely know that the market demand is there, but we're just not quite there yet on user interfaces. So I think this is very much a journey that the market's going to go on. I think that will be the end result, but I think at the moment, tokenization itself really leads itself to a test and learn deployment. I think we'll see one fund, one asset class at a time, and private equity will be down the road as opposed to one of the first cabs.
Having said that, we have gotten somewhere, I think. So could tokenized funds lower entry thresholds for retail investors across Asia, you think?
I think we will see that. I think there's still some regulatory hurdles to go through to get there. But again, it's the drive. People want to be on public networks. They want to get into that retail. We want to give mum and dad not only more value for their money, but also the same access to assets that institutional investors have.
Justin, we were talking about improving efficiency with tokenization earlier. So let's zoom into the mechanics. Tokenization promises better efficiency, but exactly how does it do that? How does it improve fund operations? Are we talking faster transactions or some examples for us maybe?
Yeah, no, of course. So just recently we did a piece of work with Value Exchange where we did an in-depth study with just over 26 asset managers. What we looked at there was their overall operating cost, which at the moment is sat around about 0.74% of AUM, and they're expecting that to rise by 32% over the next 3 years. So when we start looking at what can tokenisation do, we really see some efficiency operations there. So we think from the feedback they gave us, we can cut costs by around about 23% through tokenisation. That's going to deliver around about 3.1 to 7.9, depending on the size of the fund, P&L uplift, which is massive. Equally, to your point around launch times of new funds, today it's at around about 12 weeks to launch a fund. With tokenisation, we can bring that down to about 8. So again, that will change seeding requirements, speed to market, access. There's an awful lot in there. Then we start looking at those asset services. So now, again, with blockchain technology, with single records, immutable records, we can see that fund accounting, there's probably about a 30% saving there. 25% on traditional transfer agency because it will no longer be traditional transfer agencies. And equally, again, you think about self-serve reporting, you're no longer paying for all of that. That's about another 24%. So there's an awful lot there that we will start to see some efficiency drives through.
Wow. So we're seeing kind of efficiency in terms of settlement, reconciliation steps and the like?
Well, even more so than efficiency. I mean, some reconciliations will just be totally eliminated. Oh. You won't need multiple stacks and people performing the same reconciliation across different places. You'll be drawing that golden record from source, from the blockchain.
Wow, impressive. So potentially lower fund management fees for end investors as well?
You would hope so. So, of course, if we can stop the costs from escalating, they're not going to be passed on. If we can lower, that total expense ratio for the fund managers, absolutely, we would hope that would be passed on to the end investor.
Okay. Where do you see the biggest opportunities for cost savings in the fund distribution chain?
Look, I think it's that full end-to-end admin piece. We can start to synergize systems. We can start to synergize processes. As I say, when we can start using golden record and the chain activity, that's going to give us that real incremental reduction through. We're going to start to see automation and scalability really jump at levels we haven't seen for quite some time.
Okay, switching gears a little bit. What are the potential impacts of tokenization on liquidity in fund markets, particularly for alternatives?
Yeah, good question. So with alternatives, again, similar to PE, we're seeing a drive of people wanting to do that. I think we're not as clear as what we are on funds for what the overall impacts for that will be. But again, that will come clear as more and more people go into those test environments.
So can they create dynamic secondary markets that didn't previously exist for certain fund classes?
Yeah, absolutely. So because the register is going to be there, you can run both primary and secondary markets on chain activity. So you will absolutely have that opportunity to do it. But again, that will be driven by the liquidity providers and the fund managers to how much they've got within those funds.
Are there concerns around audit issues or standardization in automating these core processes?
No, that's the beauty of it. A lot of the existing processes will still be there. So it'll be the same license holders, albeit potentially license variations for digital as opposed to the standard flow. But a lot of all of the same audit requirements, all the same controls are all going to be there. So it should, in most cases, as a sort of 80-20 rule, fit into the 80% will fit into the existing risk frameworks.
Okay, Justin, you take care of things in Asia. So Asia's fund ecosystem is diverse and fast-growing. We've got Singapore, Hong Kong, Malaysia, Indonesia. How can tokenized funds change the game for distribution and investor access in this part of the world?
Yeah, look, I mean, again, as we move away from just standard fiat transactions and we can start to use stable coins and true digitally native currencies, I mean, it's going to open the markets tremendously. We won't have so much FX activity. We'll be able to go and trade on a 24-hour model as opposed to the current cash cutoffs. So we definitely see a huge opportunity across the region. And this is something, again, we've been talking about fund passports and things like this for 15 years and never quite got there. But the technology advancements that we have today is really driving those initiatives that we should now really start to make some inroads into them.
So how soon do you think that could happen? Could we be looking at tokenized versions of unit trusts or ETFs being bought and sold by retail investors across, Southeast Asia in the near future?
Well, I mean, if we look at Franklin Templeton and BlackRock, they've already got collateral funds up and running. So we know they're there. We're getting a big push from our client base right now. We will have some tokenised collateral funds on network by the end of June. I envisage that once a few more of those names go public, really starting to take off and be used. I think then, as I say, we'll start to see those switch into digitally native, which will change that game considerably. We're seeing the same drive from Singapore as we are from Hong Kong, as we are from Taiwan, and again across Indonesia, Vietnam. Everybody wants to get into this and wants to get into it early. But there's only a few markets that really have the volume to take this off.
Okay, digging into that a little bit deeper, what trends are you seeing in Asia's appetite for digital fund infrastructure and tokenized products?
Yeah, so Singapore very much in and around that collateral and distribution. We're getting a lot of conversations that are talking about, how do we take an existing fund and can we tokenize that, or can we have a dual operating model? So again, we're moving away from the proofs of concepts to some very serious practical questions and deployment opportunities of how do we take tokens forward. In each market that we're in, we're having similar conversations, be that in and around Asia or more broadly on a global scale. Right now, again, from an efficiency and speed to market to get some of these live, we've just deployed a distribution model that now allows anybody to take an existing fund and digitalize it. So now, we're looking for more and more people to really take that charge and bring those opportunities forward.
So, you work in this space, you live and breathe in this space. So how ready do you think asset managers are in the region for this shift in distribution models?
I think they're getting closer. I think, again, for everybody, it's been a journey. One, to justify project costs and really the why. People are now understanding the opportunities of new distribution channels, new opportunities to bring more revenues through. So I think this year is going to be the big year. I'm not going to say by December we're going to have hundreds of tokenized funds, but we will have started that journey. There will be live funds. I'd probably take a prediction, 50 to 60 funds actively trading.
Wow. And, sidetracking a little bit again, how is tokenization being viewed by high net worth individuals and family offices in Asia who may be seeking fractionalized bespoke portfolios?
Yeah, we haven't seen such a demand on that. It was interesting, sort of beginning of last year, there was a bond fund set up and it was specifically targeted in for the high net worth investors. And it really never went anywhere. I think, again, the high nets, if they want to go and buy something, they can. There isn't as much of a demand on the fractionals as there is for normal insto. However, to your earlier point, I think that will change when we start to look more at the alternatives in PE.
Some folks argue this is just another layer on top of the existing system, not a true disruptor. What's your take? Yeah. Do you think tokenization will complement or eventually replace legacy infrastructure?
Yeah, absolutely. I mean, when we look at a lot of the infrastructure that's sat around, a lot of the TA systems are 15, 20, 30 years old. I mean, some of them are old on old AS400 frameworks. I mean, they cost money to maintain. The asset services are not making much money out of the service. It's ripe for disruption. It's ripe for replacement. Again, we're not going to just flick a switch and turn it off because we need to do regulatory change, that people need to go on that journey to do the migration. But I absolutely see blockchain. I see the new tech that's in and around replacing a lot of the existing tech. But it will also just change the way in which people are working in the market. There'll still be a place for everybody, but I think people's roles are going to change as this model evolves.
And Justin, from your perspective, what does the ideal fully tokenized fund ecosystem look like in 5 to 10 years?
5 to 10 years, I mean, fully digitally native. You'll be able to, from an app, go and buy. You'll be able to use Singapore dollars that will automatically go into digital currency. You'll be holding your own wallet that will have multiple in. I mean, you're just going to have instant access, instant liquidity, and you're going to have instant views of everything you hold with real-time valuations.
And what's Calastone's role in making that happen?
So for our role, we provide the technology in and around to run those registers. We do the connectivity to rate those trades. And we also then do a series of reporting depending on your models of whether you want, gross asset values, NABs, REC reporting, all those services in and around. So basically, we're setting up that ecosystem for people to plug into. And then we will partner with all of the various blockchains in order to hold that data across those chains.
Justin, this has been an incredibly insightful conversation. If I had to sum it up, I think tokenization isn't just about digitizing assets. It's about reimagining access, efficiency and transparency in this whole fund ecosystem. For our listeners here and in Southeast Asia, especially those in finance, I think it's something really well worth watching. So where can people learn more about Calastone's work or connect with you?
Yeah, absolutely. So we're based down in Asia Square in Singapore, but we have offices in Taiwan and Hong Kong. Our webpage, www.calastone.com. There's lots of videos, lots of white papers, industry insight. Go on, have a look. All of our contact details are on there. For anybody listening that would like to discuss, debate, find out more, by all means, give me a shout.
Wonderful. Thank you so much, Justin.
Thank you.
He is Justin Christopher, Managing Director for Asia at Calastone, one of the world's largest global funds transaction networks.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.